Alright, YouTube, this is going to be part A. So as you can see, yesterday I bought work on the fish hook right here. You can see the yellow lines below that purple line. It was going up and the market crashed. So since the market crashed, I actually took a day trade and I made about $20 here. I wasn't going to risk holding it up if the market was going to crash down. I had that $30 call. Right? And so today it actually continued rallying, which is surprising. So had I held it today, I would have been up almost 2x rather than, about $20. Instead of $20, I would have about $330 more. But today, since the SPY is rallying, I did see that the yellow line is crossing the purple line on the 1 hour period. Right? So what I did is I bought work a little bit before the yellow line crossed on the purple line. So what we're going to see today is it's going to continue rallying up as far as what my theory has shown me in the past. And I pretty much went all in on this trade. So we're going to see how it's going to go. I'm going to day trade this one. So if I am right, I'm going to look at maybe a 2 to 3x, depending on what it's going to do. I bought really far out of the money. It was right around 30.60, and I bought 31.50 call for $100. And I'm doing something that's a little bit different that I haven't done on stream or I haven't done before, and it's essentially borrowing from myself. So I have this theory where if I can borrow X amount of dollars from myself, day trade it, put that money back in my pocket, then I'm guaranteeing that I didn't lose money, plus I'm going to get additional profits. So just looking at the Robinhood account I have right now, I have 15 contracts on work. I bought at $100, so it's $1,500 in. It's up $5. So if I sell everything right now, slight profit. It's not too great, but what I'm hoping for is it goes to that 31.20 mark, maybe even 31.50. And if it does do that, we're going to look at 2x. So it's going to go about $200. So it's going to double up. I'm going to close anywhere between $3,000 to $4,000 today, depending on how everything goes. And yeah, once I close out this day trade, I'll have a lot more cash flow. I'm going to put the $1,000 back in my pocket, and I'll use that $1,000. I'll probably use this technique again next week, depending on how the market goes. And you're going to see me slowly scale this account. I'm going to go from the small account straight to the large account using all these different tactics and methods that I'm practicing. I'm going to write a report on this. And basically this borrow theory, I really think it's going to be game changer. Because most people don't actually think about, hey, you have cash flow sitting at the bank, and you don't know what you're going to do with it. But if you borrow it for a day and put it back in your pocket a day, I think that's a really viable strategy. So we're going to see how this pans out, and I'll give you guys an update by the end of the day. But as you can see here on the work graph for 1 minute, it went up, so it trended up, and then it went down, and then it did up and then sideways. So basically what that means is the stock's trended up, it's tested this level at 31.24, it went down just to, just as there's a sell-off here, we're just taking profits, and then it flatlined a little bit, which means that there's support down here, which is higher than the original support. Then there's a bull flag consolidation where it got bought up, and then it went sideways. As you can see here on the relative momentum, it's pretty much going up, 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 and then it's, the momentum's going down just a little bit as it's going to rest. But as it's resting, it's pretty much going sideways. You can see the TTM squeeze. It's essentially just getting bought up. And then there's all these red dots on the 1 minute, which means there's a pause that's going sideways. So anytime a stock goes up and sideways, it's called a bull flag consolidation, where the bulls buy the stock up and they push it to the next level of stock price. And the consolidation is when it goes sideways. Essentially, when the stock price goes sideways, all the buying and selling is pretty much in equilibrium, meaning that the amount of selling and the amount of buying is pretty much equal. And when that happens, all the supply gets bought up. So if all the supply gets bought up, the stock price can only be sold to somebody if they're willing to pay what the price someone's trying to sell it for. So if you're buying here at like 30.82, obviously you don't want to sell it less than 30.82. So that's gonna push the price higher. So like if they bought at 30.82, they probably won't sell until 31. So as you can see up here at 31, starting to be a little bit selling just so they can take some profits. And as it goes sideways from there, it will slowly just keep pushing the stock higher and higher and higher. As the momentum picks up from the yellow line crossing the purple line, there's a really big chance that, or a really good chance that the stock price could go past 31. As you can see, it's already tested it here. So if it does touch there again, and it does another bull flag consolidation, you'll see something that goes up, sideways, and then up again. Another thing that I'm seeing on work, which made me really interested in this, is there's a catalyst, which I'm going to go ahead and read. And I'll pull it up right over here. So the catalyst is for MV Slack Technologies. The stock price target got raised to $35 from $27 at MKM. So as you can see, last time they put a price target on 27. The price was actually, it got up to right around 30. Now they're putting a price target on 35, and as you can see, a lot of people are using Slack working from home. There's a good chance that it could go to 35 or even higher. So I'm definitely going to add this on my watch list. It'll be something that I'll probably play again in the future as it's rallying against the COVID-19. So I'll give you guys an update at the end of the day.